All right, listeners, you know we're all about earnings calls here at Talk Tickers, but got to break away from the usual routine when a story breaks that just demands a deep dive.
Definitely.
And folks, this is one of those moments for sure.
Absolutely.
So we're diving headfirst today into some breaking news that's got the corporate world buzzing.
Yeah, this one's making waves.
Big time. We're talking about none other than Elon Musk.
Of course.
And his Tesla pay package.
That massive compensation plan?
Oh, yeah, the one that's been sparking heated debates for years.
It's been a long saga.
And now a Delaware judge just dropped a ruling that could totally reshape how we think about executive pay.
You know what's really captivating about this case? It goes way beyond just the typical market ups and downs.
Right.
It digs into the core of how power really works in these big companies.
Exactly. And to fully grasp the weight of this decision, we need to rewind back to 2018.
Back to the beginning.
When that initial compensation package was put together.
It was structured around these really ambitious performance goals for Tesla.
Right, like hitting certain market caps, reaching specific operational milestones, things like that.
Yeah.
And the kicker, if Tesla hit all those targets, that package was projected to be worth a mind-blowing $56 billion.
$56 billion.
With a B. It was unlike anything anyone had ever seen before in terms of CEO compensation.
It was unprecedented.
And, of course, it immediately ignited a firestorm of controversy.
Oh, for sure.
Fast forward to today, and we have Chancellor McCormick.
The Delaware judge overseeing the case.
She just flat out rejected a request to restore that very same pay package.
Yeah.
And her reasoning. That's where things get really juicy.
It's fascinating.
So let's unpack why this ruling is such a big deal.
Okay.
The judge basically put Tesla's board on blast, saying they weren't truly independent in this whole process.
Right.
And that they essentially just caved to whatever Musk wanted.
It's pretty scathing.
Oh, yeah. The judge didn't hold back.
Not at all.
She even called some of the defense team's arguments unprecedented theories.
I love that quote.
That completely contradicted established corporate law.
Yeah, it's like she's saying, come on, you can't just make up new legal arguments to justify this.
And here's another twist. Even though Tesla's shareholders later voted to reapprove the package,
they did.
The judge wasn't buying it.
She wasn't swayed.
Her argument was that a shareholder vote can't just magically erase those underlying issues.
Which were?
Lack of board independence.
Right.
And, a real lack of due process.
Especially in a situation where you have a figure like Elon Musk.
Right, who wields so much influence.
Over the company and its shareholders.
Exactly. It's like she's saying the substance of how that decision was made matters more than just the optics of a vote.
That's a really important point.
It is.
Because it speaks to the limitations of shareholder votes in these kinds of situations.
For sure.
Where there might be pressure or maybe a lack of transparency.
Absolutely.
The judge is essentially saying the process matters.
Yeah, it's not just about the outcome.
Exactly. How you get there is crucial.
And it really makes you think about the whole balance of power within a company.
It does.
On one hand, you've got a visionary leader like Musk, who's been instrumental to Tesla's success.
No one can deny that.
But on the other hand, there's this responsibility to make sure everything's fair and accountable.
Especially when it comes to executive compensation.
So where do you draw that line?
It's the million-dollar question. And this case has brought it to the forefront in a really dramatic way.
No doubt about it.
It's a complex issue with no easy answers.
That's for sure.
Yeah. And that's where the whole duty of care thing comes in.
Right.
The judge is basically saying Tesla's board didn't uphold their legal duty to act in the best interests of the company.
Right.
When they went ahead and approved this package.
Okay, so it's not just about the dollar amount itself.
No.
It's more about how the board came to that decision.
Exactly. The judge is really scrutinizing their justification.
Okay.
The transparency, the diligence.
Did they do their due diligence?
Yeah, did they really think this through? And in her view, they didn't meet that legal standard.
Interesting.
It's a pretty big deal.
So Musk's team, they argued that the shareholders' vote of approval.
Right, the later vote.
Yeah, they should have carried more weight.
Like they were saying, hey, the owners of the company are on board. What's the big deal?
Right, what's the problem?
But the judge wasn't convinced.
She didn't agree.
No, she made a really important distinction between shareholder approval and the board's actual duty.
That fiduciary duty.
Yeah, like a shareholder vote is important, sure, But it doesn't mean the board can just ignore their own responsibility.
To act independently.
Right.
Make sound judgments.
Especially when you're dealing with someone like Elon Musk.
Who's got so much influence.
Exactly. It's a fascinating dynamic.
It really is. And this case kind of highlights that tension.
What tension?
Between, wanting to keep a leader like Musk around.
Right.
Versus making sure corporate governance is solid.
You gotta have...
Tesla argued they needed to offer this insane compensation.
To keep Musk engaged.
Yeah, given all his other projects.
Like SpaceX.
Right. He's a busy guy.
And that touches on a bigger debate.
About
how companies kept their top talent.
Especially in those industries that thrive on innovation.
Absolutely, where risk-taking is everything.
But the judge pushed back on that.
She did.
Saying, sure, Musk's done amazing things for Tesla.
Right.
But the board didn't actually show why this level of compensation was necessary.
It's like she was saying, show me the proof.
Prove that this was the only way to keep him.
Right. Justify this extraordinary amount.
And that's what makes this ruling so groundbreaking.
It sets a precedent for looking closer at these huge executive pay packages.
Especially the ones that are way outside the norm.
Shareholders and courts are demanding more transparency.
You want to know why?
Yeah, they want justification when it comes to CEO rewards.
It's about accountability.
Especially when you're talking about these staggering sums of money.
We can't forget about the plaintiff in all of this.
Richard Tornetta.
A Tesla shareholder.
And a former heavy metal drummer. Can you believe that?
What a story.
The fact that he was able to take on Tesla and Musk.
And win.
It really shows the power of shareholder activism.
You can fight for what you believe in.
Even against the giants.
It's a classic David and Goliath tale.
It could inspire other shareholders to step up.
Demand more accountability from boards.
When they see executive pay that's just gone too far.
Speaking of big numbers, we got to talk about those legal fees.
Oh yeah, those were something else.
The plaintiff's attorneys initially wanted $5 billion in Tesla stock.
As their fee.
$5 billion.
The judge even found that a bit much.
She said, in a case about excessive compensation, that's a bold ask.
I love her sense of humor.
She ended up awarding them $345 million.
Which is still a massive amount of money.
It shows how much is at stake in these legal battles.
These cases can go on for years.
Yeah, the costs can be astronomical.
It adds a whole other layer of complexity to the story.
And speaking of things dragging on, Tesla's already said they'll appeal.
They're not giving up.
What do you think their chances are? Could they actually overturn this decision?
Appeals courts are tough to predict.
Yeah.
But it's possible Tesla could find a way to challenge the judge's reasoning.
How so?
Maybe by focusing on the interpretation of corporate law.
Okay.
Or the specifics of the board's fiduciary duty.
So this legal saga might have a long way to go.
It's not over yet.
And whatever happens could have ripple effects throughout the corporate world.
Absolutely. Companies, investors, legal experts.
They're all watching this case closely.
Because it raises some fundamental questions about the balance of power in corporations,
right?
The role of shareholder activism,
and the future of how CEOs get paid.
It's a big deal.
It's a reminder that corporate governance matters.
And that even the most powerful CEOs aren't above the law.
It's a powerful message.
It really is.
Makes you wonder how this is going to sit with Musk. He's not exactly known for taking no for an answer.
True. He's got that reputation, right?
Yeah. I mean, could this decision make him want to just step back from Tesla even more?
I mean, it's definitely possible.
Yeah.
This ruling could feel like a lack of, trust in his leadership.
Right.
Which might push him to focus on his other projects.
Yeah, put more energy into SpaceX and Neuralink.
Exactly. It's almost like this whole thing's a big chess game now.
High stakes.
Oh, yeah. Every move has these ripple effects that no one can predict.
And it's not just Tesla either, right?
No way this could impact the whole tech landscape.
Musk is such a game changer.
He is.
So any shift in his focus could shake things up in a big way.
This case has definitely thrown a wrench in the works.
For sure.
It'll be interesting to see where it goes from here.
Yeah, will Tesla's board try to come up with a new pay package?
Maybe one that appeases everyone.
One that keeps the lawyers happy and Musk happy.
And satisfies the legal requirements.
Right. Will Musk double down on those other ventures?
Maybe even step away from Tesla completely.
Those are the questions everyone's asking.
Analysts are going to be dissecting this for months.
Before we wrap up today's deep dive, let's have a little fun.
Okay.
Time for our This Is Not Financial Advice segment.
The disclaimer is key.
Always given all the craziness with this case, what's a trade idea that's out there but still kind of plausible?
Okay, how about a long-term bet on Tesla splitting up?
Splitting up?
Yeah, into two separate companies.
Okay, I'm listening.
One that focuses just on electric cars and the other on those more futuristic Musk ventures.
Like SpaceX and Neuralink.
Exactly. Maybe this legal battle pushes them in that direction.
You know, I could actually see that happening.
Right.
With Musk being pulled in so many directions. A split might be the best way for both sides to thrive.
Focus on their strengths.
Imagine a pure electric car company just dominating the market.
And a separate company pushing those boundaries of space travel and AI.
It's a Wall Street dream come true.
Or a nightmare, depending on how you look at it.
Exactly. High risk, high reward.
Gotta love the market, right?
Full of surprises.
Never a dull moment.
All right, listeners, that does it for our deep dives into this landmark ruling on Musk's Tesla pay package.
We covered a lot of ground.
We did. We talked about the legal stuff, the corporate governance, and even threw in some speculative trade ideas.
It's been a wild ride.
But the biggest takeaway today is to always keep learning and don't be afraid to challenge the status quo.
We just scratched the surface here.
So we encourage you to check out the source material.
Do your own research, form your own opinions.
And hit us up on social media.
We love hearing from you guys.
Thanks for joining us on this detour from our usual earnings call coverage.
Back to the grind next time.
We'll be back with more analysis of all the latest financial news.
Stay informed and stay engaged.
This is Talk Tickers, signing off.